Welcome back to my portfolio update for my InvestEngine Stocks and Shares ISA for the month of July. So without further ado, let me just get that up on screen now, record from my phone, and we'll see how we've done this month and have a look through everything that's been going on in the InvestEngine account right now. So as you can see on screen now, another £1,000 gone in. That's my current direct debit into my Stocks and Shares ISA. And that's kind of how I'd like to keep it for the rest of the year. I would really like to be able to max it out, but I'll have to see how my finances go toward the end of the next financial year, especially as we go into 2024. We'd of course love to be able to get that £20,000 maximum. The benefit of that, as you all know, regular viewers certainly, inside the Stocks and Shares ISA, that will grow completely tax-free, so there's nothing to worry about in terms of dividends or any capital gains. So in the really long term, the whole idea there would be that this is a completely tax-free investing pot. Obviously, nobody knows what's going to happen in the future with that amount, or whether that gets reduced by future governments, etc. But for the time being, let's make the most of it, that's for sure. Now, in terms of the portfolio, as you might see on screen now, this blue line is where money goes in. So I've been putting £1,000 a month in, as you can see. And then the green line is all the returns of what you actually get from the portfolio. So as you can imagine, through the different months, you're going to go up and down as you would expect typically in the stock market. Now, as a quick refresher for regular viewers and a bit more in depth for brand new viewers to the channel, this is a very simple ETF portfolio that I've made really just to kind of mirror the world. So there are a couple of gaps in it, and it's not precisely exactly with market weights of what you would expect from a global index fund. But I wanted to do this, have a little bit of play, have a little bit of a tweak for myself, but also have something that's really low cost as well. So this InvestEngine portfolio doesn't cost me a single penny in terms of the actual account cost. The platform cost on InvestEngine is completely free. And the expense ratio of the entire portfolio is 0.09%, as you can see here, which is really super low if you compare that to maybe some other mutual funds which you might be investing to, or some other platforms out there. Now, in terms of performance, as you can see here, we do have a green number. We are up just a very small amount at 1.62%. As I'm recording this video. Not a huge amount has happened in the last month in the stock market. Things have been ticking along steadily. And if we have a look in the account, really the star of the show is the S&P 500 at the moment, up just over 5%, with all the other weightings actually, and all the other ETFs actually right now in the red, with the FTSE 100 having particularly bad time at the moment. Now, personally, I don't mind seeing those red numbers, and if anything, as a really long-term investor who has no interest in making money in a short period of time, I'm actually welcoming these drops, to be honest, because it does mean that I can buy these equities and buy these stocks at lower and lower costs, and really try and get my average cost basis as low as possible as I put money in every single month. And it's funny with investing, isn't it? Although you'd really want to see everything green every month to think, wow, I'm making all this money. If anything, the next time you put money in, of course, it means that you're going to have to buy at those slightly more expensive prices, which in the long term might hurt your returns. But at the end of the day, if you do dollar cost averaging over the very long period of time, it does mean that you'll get that average cost of the market. And really the idea, especially from my perspective, is to just make sure that you keep investing regardless of what the market does, and especially when it goes down, because that's the time when you really get those returns over the long period of time. And just on that subject of kind of dollar cost averaging, what is quite nice with the platform actually, if you do click on any of the ETFs that you are invested in, and there's hundreds to choose from on the portfolio, as you can see, those little black dots there in the corner, as you can see on the screen recording now, is when you made your purchases. And the longer term and the more you do this, the more and more times you actually invest every single month, you'll see those black dots appear. And the idea would be, you can imagine having these little black dots all along this graph, because in the long term, we would expect the equity market to go up. Now, of course, the average you keep hearing is 9 or 10% every single year. As you know, in the short term period, that is very unrealistic, or actually never achieved at all. Over that longer time period, over 2 centuries worth, we do have that data that says the stock market typically achieves that on average. But you only get that average if you actually make sure that you buy during the highs or the lows. Just something I thought was quite interesting there to remind yourself of why you're actually doing this in the first place. Now, just in terms of weightings and how I've got these ETFs split, the S&P 500 makes up 58% of my account, or at least that's how I wanted to start it. The FTSE Developed Europe Fund here, as you can see, excluding UK, makes up 20% of the fund. The FTSE Emerging Markets I wanted to make up 15% of the fund, and the FTSE 100 I wanted to make up 7% of the fund. Now, the dark numbers is what it actually makes up right now, as those prices have fluctuated up and down, and I will balance that eventually at some point in the future. And this explains why the portfolio is in the green, even with 3 out of 4 of them currently losing. Because at the end of the day, with the FTSE 100, it's only a small weighting of 7%. It means that that 5% dip is only £26 in the negative, whereas 5% for the S&P 500 puts it £176 up currently. Now, as always, if you are a brand new investor and looking to get yourself set up anytime soon, don't forget that there is an offer still on from InvestEngine where if you deposit £100 into a brand new account, you will get £25 from them to help top you up. Other terms and conditions do apply, but do see the link in the description below. The offer is only available through that link. And thanks to many of you who've already signed up there. There's no free money in investing, so you may as well take those sort of things while you can. So don't forget to check out the link in the description below. One thing worth noting is that all of these ETFs that I've currently got in the portfolio are accumulation versions. So for example, I'll just click on the Vanguard S&P 500 one here, which is VUAG. Now all that means is that I won't see a single penny of dividends in this account. That's just my personal kind of opinion and my personal thought that I don't really care about seeing dividends land into the account that I might have to manually reinvest. With all these accumulation funds, all those dividends get paid into the fund and then automatically reinvested back into the same fund. So for me, personally, I think that works pretty well. However, do remember that there are distributing versions for all of these ETFs. So for example, again, just going back into the S&P 500, many of you will be aware of Vanguard's VUSA. That's the alternative version, which does offer a payment of dividends. And right now, the dividend yield of the S&P 500, I think is around 2%. I think it's just under 2% at the moment. So you will get that 4 times every 3 months, and you will get a payment out into your account. Ideally, you'd still have that inside of a stocks and shares ISA to make sure you do protect yourself from the tax man, because outside of that in a general account, you will be liable for taxes outside of any allowances that you do get at the moment. If you do want to have a look at this portfolio in more depth and have a look at it yourself, I have shared it. I will leave a link in the description below. If you just have a look here, I have called it Toby's World. Very, very simple setup with those 4 different ETFs. And I have also shared a second portfolio, which is called Index and Chill, which is an even simpler one, which is Vanguard's FTSE All World Fund. So again, regular viewers will know this, but if you are brand new to the channel and you haven't seen this update before, this is something again which I have shared, which you could use. If you want to keep things super simple, in my opinion, just bear in mind that I'm not a financial advisor. You should do your own research and please do seek professional help if you need it. But this is a very, very simple fund if you just wanted to invest in a single ETF to cover the whole world and then pretty much, as it says on the tin, index and chill. Now, if you do want to go back through my different investment journey, you can go through all of my different portfolio updates. I have made a playlist and most of them, touch wood, should be inside there. Anyway, don't forget to leave a like on the way out, subscribe for many more, and always drop me a comment below. Let me know how you're getting on this month with your investments. If it's going good, if it's going bad, and also if you're just staying along with the course. Anyway, thanks so much for watching, and as always, happy investing.